Traditional IRA or Roth IRA? Which one is better for you? Is it the traditional? Is it the Roth? Is it neither? Tough questions to ponder. Hi there, my name is Kenner French. I'm with Vast Solutions Group, the nation's premier tax and financial engineering firm for entrepreneurs. We work with entrepreneurs all over the country, from New York to Florida to California to Washington State. Right now, during this coronavirus era, it is more important than actually ever, to understand the differences in how one would apply to you and affect you. Well, traditional IRAs, which were created in 1974, are owned by roughly 33.2 million U.S. households. Roth IRAs, however, were created as part of the Taxpayer Relief Act in 1997 and are owned by nearly 22.5 million households. Both are IRAs, and yet each are quite different. Know the limits. Up to a certain limits, traditional IRAs allow individuals to make tax-deductible contributions to the account. Distributions from traditional IRAs are taxed as ordinary income, and if taken before 59.5, may be subject to a 10% federal excise tax penalty. Remember, under the Secure Act, in most circumstances, once you reach age 72, you must begin taking what's called required minimum distributions from a traditional individual retirement account. Additionally, you may continue to contribute to your traditional IRA past 70.5 under the Secure Act as long as you meet the earned income requirement. Now, if you're filing single, for singles, the maximum taxable deductible contribution starts shrinking once your modified adjusted gross is $65,000. If you've made $75,000 and above, you're not eligible for the deduction. Filing jointly. For those who are married and filing jointly, things are a bit more complicated. If you or your spouse make an IRA contribution that is covered by a workplace retirement plan, the deduction begins phasing out when your adjusted gross income is at $104,000 and it disappears at $124,000. Now, however, if you do not have a workplace plan, but your spouse does, or vice versa, in 2020, the limit starts at $196,000 and no tax deduction is allowed once the contributor's income reaches $206,000. Now, also within certain limits, individuals can make contributions to a Roth IRA with after-tax dollars. To qualify for a tax-free and penalty withdrawal for earnings, Roth IRAs must meet a 5-year holding requirement and occur after age 59.5. Income impacts total contributions. Now, like a traditional IRA, contributions to a Roth IRA are limited based on income. For 2019, contributions to a Roth IRA are phased out between $193,000 and $203,000 for married couples filing jointly, and between $122,000 and $137,000 for single filers. Contribution limits, in addition to distribution rules, are limits on how much can be contributed to each year in either IRA. In fact, these limits apply to any combination of IRAs. That is, workers cannot put in more than $6,000 a year into their Roth and traditional IRAs combined. So if a worker contributed $3,500 in a given year into a traditional IRA, their contributions to a Roth IRA would therefore be limited to $2,500 during that same year. Now, catch-up provisions, or catch-up contributions as they're called. Individuals reach age 50 or older by the end of the tax year can qualify for what's called a catch-up contribution. The combined limit for these is $7,000. Now, let's chat. When it comes to picking an IRA, both individual IRAs or traditional IRAs, they may play an important role in your retirement strategy. If you have any questions, let's chat about it. These are very specific in every situation. They really could work or not work. Similarly, there's a Roth 401k and a traditional 401k. It might fit you, Mr. or Mrs. Entrepreneur. Check us out on the web at www.vastsolutionsgroup.com or give us a call at 888-808-8278, and we'd be more than happy to help you. I bet you we can better your situation. Thank you, and I hope you have a great day.